Walmart is the biggest retail chain in the world, the undisputed Goliath in its sector, and an established consumer favorite. But none of these qualities have prevented the company from having a particularly difficult year financially in 2022. And it seems like more bad news has just emerged since year-over-year sales have been declining. The brick-and-mortar retailer has been struggling to compete with online retailers such as Amazon, which continues to seize an even larger share of the market. But those aren't the only signs of trouble for Walmart, as overstock of certain goods and inflation eats away at its profits. We have a lot to cover in this video, but before we do, we kindly ask you to support our work by giving us a thumbs up, and don't forget to subscribe to our channel. The retailer is facing painful inventory losses due to an ominous reason, and CEO Doug McMillon is warning that even higher prices and more store closures could be on the horizon for the retailer. Walmart's merchandise has recently been flying off the shelves, but not in a positive way, as CEO Doug McMillon said in an interview with CNBC. As a result, the retail giant may soon be forced to raise prices once again and shut hundreds more stores. Theft has increased at an alarming rate in the stores, McMillon explained. Although the executive preferred not to identify which area stores were particularly affected by the issue of shoplifting, he noted that soft local policies have contributed to the increase for these types of offenses, and that the lenient approach by law enforcement needed to be corrected. This week, the Daily Mail reported that Los Angeles Walmarts are now locking up many of their goods to stop new thefts. Consumer remarks on social media indicate that numerous retailers previously employed the same tactic. One of the most startling incidents was recorded on tape by a Florida citizen called Michael Frumhold. In her 12-second TikTok video, the Walmart consumer demonstrated that the company had started locking up expensive steaks in metal cages to combat the spike in shoplifting nationwide. The video gained 4.3 million views in only 4 days after going viral. Bloomberg reported in 2016 that the superstore chain lost nearly $7 billion due to stealing, which equals about 2.5% of its yearly revenues across all retail brands, despite Walmart officials being famously discreet about how much of a problem it is for the firm. According to the National Retail Federation's 2022 Security Survey, the average rate of profit loss caused by retail theft stands at 1.4%, meaning that Walmart's 2.5% losses are nearly 2 times higher than the industry average. 4. Walmart alone accounted for about 7.4% of the total loss suffered by retailers in 2021. Retailers lost $94.5 billion in 2021 because of shrinkage. This new wave of theft could not have come at a worse time for the retailer. McMillon acknowledged that theft is a problem, and that it is higher now than it has been historically. He added that the company has been forced to implement new safety measures at various locations and to work with local law enforcement to address the growing problem. The chain recorded operational income of $2.7 billion in the most recent quarter, down 53% from $5.8 billion in the same period of 2021. The retail behemoth then reported a 32% rise in inventories in the second quarter. The company said inventory excess stocks have decreased by 12% from the second quarter and are currently 20% higher than a year ago. However, store-level employees told Business Insider horror stories from their back rooms, having a multitude of pallets rendering floors unwalkable, towering boxes that have blocked access to private breastfeeding rooms and bathrooms, and outdoor trailers staffed with overstock. With the economy weakening, the company's sales in several categories are continuing to fall short of projections. Walmart has a reputation for having low prices, so inventory theft may be devastating for the retail titan. We recently learned that this wasn't always the case as we previously reported. Since 2020, overall grocery prices increased by more than 20% at Walmart stores, with some products seeing price increases of more than 100%. These increases were partially caused by rising costs that food manufacturers passed on to consumers who have been feeling the effects of these increases to the fullest. A recent CNBC study revealed that 80% of consumers claim that rising prices make them worry about the future, and 45% claim that having trouble paying their expenses has negatively impacted their financial outlook. Despite its reputation as a discount retailer, Walmart is becoming out of reach for millions of consumers who are feeling the strain from growing consumer costs. With inflation at a 40-year high, consumers are more aware of the rising cost of food and fuel, and they've been spending less overall, according to Joe Biswalis, chief economist for the financial data company Bloomberg LP. Walmart's consumer is shifting downward, according to Biswalis. The competition for Walmart is now dollar stores, the company CEO mentioned to analysts on a recent call. According to McMillon, during times of inflation like this, middle-income families, lower middle-income families, and even wealthier families become more price-sensitive, but believe it or not, the finances of the world's largest retailer are being squeezed too. The company is pleading with suppliers not to raise prices and asking for discounts, which is putting more pressure on margin mix and operating costs than we anticipated. Walmart may need to increase prices more to maintain profits in 2023 due to a persistent wave of theft beyond anything they have ever witnessed. In an analysis, Philip Nelson, a client partner at Fractal Analytics, observed that Walmart appeared to be confident that it had the scale necessary to absorb inflation well enough to avoid passing on significant price increases to the customer. It's safe to say that confidence was lost in 2022, when prices continued to rise to the point where Walmart customers were severely cutting back on spending, concentrating only on essential grocery items and avoiding spending on discretionary purchases. This year's holiday sales at the retailer's locations are anticipated to be 6% lower than in 2021. As a result, the company's profit margins are projected to be even tighter, which might result in the closure of further stores in the near future. According to the website RatherBeShopping.com, 10,000 American workers were impacted by Walmart store closures over the past couple of years. The states hardest hit by the shutdowns were Texas, North Carolina, and Arkansas. Several locations have already been forced to close because of prolonged losses and smash and grab robberies earlier this year. Customers genuinely fear losing access to their preferred grocery stores because of Walmart's announcement that it will eliminate hundreds of stores nationwide to increase profits. The organization predicted that 150 American locations will likely permanently close their doors in the next months. One of the reasons for the closings is that the business is attempting to cut its recently bloated real estate portfolio. Although Walmart has been on a purchasing frenzy acquiring properties left and right, it makes sense to sell off some of these assets now that the firm is having financial difficulties. Additionally, Walmart is attempting to increase the emphasis on its internet operations since the chain's online sales are weak compared to Amazon. Despite having expanded its online business over the past few decades, Walmart's e-commerce operation is still dwarfed by Amazon's, which seems to be a growing concern for its executives. By closing some of its physical stores, Walmart can direct resources to its e-commerce operation and try to catch up to other e-commerce giants. To be clear, Walmart is neither first nor favored in the grocery shopping sector, according to research. The same research also stated that the firm is struggling to maintain its lead over several rivals as more and more Walmart customers are opting for the competition. Prior to the pandemic, almost 40% of the online pickup and delivery market belonged to Walmart. This year, Walmart's share of the online grocery market has dropped to only 31%, while Instacart's share has increased from 20 to 30%, indicating that the retail behemoth may be swiftly losing its competitive edge. Given how quickly things are deteriorating, Walmart, 2023 may be a difficult year, and customers may soon witness the closure of many of their cherished neighborhood Walmart locations. Add to that expected price increases to cover the losses due to shoplifting, we see once again hard-working American families will be the loser.